MMTs, I got to update you how they're. Look at here. We're making all-time lows, but this 590 put's not breaking the highs. That means that they're not giving the full premium movement to the name. So you have to factor that ratio within the price of the option, MMT. And if you do that, MMT, you'll remain wholesale. But you need to know that on the 590, they're taking premium out. It's a below the money slightly, but not much. We hit 591 on the low, and that's a 590 put. But look at the premium. You're not breaking that intraday high. You're not even taking out that previous day's close here at 1840. So they're probably factor in at least 50 cents of premium contraction in the actual ratio movement of the actual entry. I'm out to buy here at 1420. 1460 is a low. This is the one that we recorded live, and it's all on the videotape there. So that's that $600 call. And I'm not, it's okay that it comes down and hits me, because I can undercut that market. I'm taking a very light entry at 1420. But the thing of it is, I put that order out at 9:36 a.m. Yeah, I did. So understanding how to be a wholesale market maker in that $600 call is that there's various markets that are made at that wholesale bid versus that retail action. Here's the name right here, 590.33 by 71. Now we're getting some premium here on the elevation of 1810 by 40 on that put. Okay, so we made an official high of 18.30. One contract, whoop-de-ding, 136. Low volume. We really let new MMTs, they can trade these low volume ones if
I'm long FCX.
if I'm doing the right thing for them. So basically, based on price action here, it's the premium below the market 590 put. It's that ratio range. So we can see that off the bottom, you had a 2.2 dot positive debit ratio range based on 5.95.94 ratio reversal from that reversal high to that wholesale bid. We are now on that top downside with 32 million sold, light volume at 351,000, but nonetheless, it's all about, we got to 1450 on a low print, and that print there, we had that print out here for a long time, 1420. We put it out there at 936. But once again, even for the people that are here in the new free trial, there's nothing to be scared about that wholesale bid based on this time of year. And a Merry Christmas to everyone, by the way. And it's a Christmas week, and it's a nice thing to be an MMT. You're not going to have your normal price action. Remember, slide the bid, all the indexes are in negative territory. What I'm going to do here is I'm going to pull this price down. Now I'm going to go cancel all, and I'm going to pull this price down to the next market. And that next market that we're going to go ahead and scale this is going to be about 1370 on 5. Let's make sure we got CVO. We do. There it is. But let's scale it. But if we hold that 1420, we can always come in and buy. We're just going to put this below where there's a lower market made based on the actual ratio movements at the strike price. And there it is, 13.70, hit OK. So basically, I will pull up the intraday chart next in the MM platform. Some hamburgers. Here we are right now. I'm live on the tape. MMT Scotty is telling the other MMTs what to do in this beautiful holiday weekend in this price action. This is that Google slide, that bid. You can see that right there. Taking out half action bar. There is the long tail. There's that short. Then there's that 369 down here to this bottom. Let's see. Oh, we got how many? We got a triple diamond alert right here in the SMF platform. Let's pull that up in the video. I apologize. Let's make sure that you can see everything that's going on in the brain. So that's slide the bid. You can see that we talked about slide that bid, that gap, slide that bid, half bar, 10 days in a row. We did it all in pre-market. We told you what to look for, how to execute it, which way the market maker would slide to the left to the market. That's the beautiful thing about being an MMT, is to be able to understand where that price action is, because that's your empowerment and your enlightenment, because you can print you a positive debit. So that's what you want to look at, is where this market gets made wholesale when they get made. And when they do get made from slide the bid, is that it's the momentum back up, where this big bar right here is going to be the key. Anyway, on the option contracts, they slid the bid down here to 1410. The put option right here, 590 put is 1820 by 1850, printing a new high of 18.45. That's a 0.45, so that's a 15 penny ratio from the close, but that wholesale bid was down here. We have a limit order out here to buy this one, I believe at $13.70 right here. And we want to start scaling that market, because we think that that's a fairly decent value during this time. There isn't anything bad going on right now economically, and growth wise it's going to be strong. So these wholesale prices down below the market, using the actual volatility, is to your big advantage in this world. So basically what we're going to be doing is we're going to be watching the actual price print on the name. We continue to break lower, so once that buyer has been washed out, we're going to see what type of bounce that Google will provide. And once it does bounce, then that's when the call on the put side of the market will make its adjustments. So Google has to bounce, and same thing with Apple. They're going to have to bounce. Notice that the selling is all on very light volume. It's not, all they're doing is dropping the bids to the lower market. They're taking out the premium, where this premium on this $600 call will have wholesale prices. And you scale these options such as that on Apple Computer, because that's what you do. So on the Google chart, we're watching where the price action will get made. And if it gets made, well, guess what? Then it's time to go long the calls, period. There's always a time intraday that the premium can be traded at the wholesale price, and you could be selling back at $14.90. Should the trend reverse its course, as it's trying to do, from its all day long slide gap price in the brain, it will slide the bid. Now let's see how we walk the dog. So I've got to take out this half action bar at 590.45. It's right there at 590.09 by 48 pennies, but my half bar is 45 cents. That's all I need to know. I need to close and break higher above that. If I don't, it's still weak, period, because the 594.94 ratio down to 5.89.60 is where we start looking at where the momentum changes or not. So basically, here's another diamond alert on the bid-ask ratio, and the half bar on this one was 589.92, just so you know, below the floor. That's the price action, and we're not going above it, we're slipping below it. The ask is 33, that bar is 45. Home plate to the stock market print is right there. Price spread is 33 cents between the two, just so MMTs know. And it's very easy for them to sell down on the bid side, so they can create these lower prints. As they do that, and once that process is done, we will find where the bottom is in the premium here. And I'm going to move on to the Apple one on the 320 call and how Apple would work. Right now, you're going to see that price action momentum rising, not declining. So here it is. I'm going to leave it right now. The time is 7:27 a.m., 3 minutes shy of the full 1 hourly movement. So it's got some work to do, and it's got to work its way back up through here, and everything has to have a complete reversal off the bottom. We'll visit it later. MMTs, stay tuned for price action.